Every single second, trillions of dollars are moving across borders. It is a massive, invisible river of capital that dictates everything from the price of your groceries to the survival of the world's largest companies. At the center of that flow is the stock exchange. It serves two highly practical functions. It gives businesses the cash they need to build, hire, and expand, and it gives everyday investors a mechanism to capture a slice of that economic growth. It is easy to look at day-to-day price swings and dismiss the market as a chaotic, speculative casino. Underneath that noise, however, these exchanges operate as highly organized engines, efficiently allocating resources to where they are most useful for global development. Yet, for a system with absolute global reach, the actual control of this capital is surprisingly concentrated. The flow runs through a handful of specific, localized gatekeeper institutions. Tracking how these hubs operate and where the money moves between them gives us a direct read on impending geopolitical power shifts, new technological trends, and the safety of our savings. To read that data, we rely on market indices, like the S&P 500 or the Dow Jones. They track the performance of a specific group of stocks, acting as a real-time dashboard for overall economic health and investor confidence. This chart shows total global market capitalization, broken down by country. Notice the massive pillar on the left. The United States holds over $45 trillion in market cap, a baseline scale that dwarfs every other nation combined. A massive chunk of that wealth lives right here, at the New York Stock Exchange. Founded in 1792, it currently manages over $25 trillion. It relies heavily on stable legacy blue-chip companies, and its physical architecture intentionally projects that traditional financial power. Contrast that with the NASDAQ. As the first fully electronic exchange, its $20 trillion market cap is heavily skewed toward modern technology and growth companies. Across the Atlantic, European institutions like Euronext and the London Stock Exchange, with its $3 trillion market cap, have historically served as the primary bridges for international companies looking to list on Western markets. While these Western institutions currently hold the majority of the wealth, that baseline dominance is facing aggressive pressure from rising international powers. We have to look east to find the fastest-growing sector of the global financial system. Currently, the Tokyo Stock Exchange holds the title of the largest in Asia. Powered by legacy industrial giants, its market cap sits at over $6 trillion. Then there is the Hong Kong Stock Exchange. Notice the flags flying outside the building. This exchange performs a specific strategic function. It acts as the vital financial bridge connecting mainland Chinese enterprises with foreign investors. Further inland, the Shanghai Stock Exchange is seeing explosive domestic growth under heavy state influence. Meanwhile, right here at India's National Stock Exchange and its older counterpart, the BSE, trading volumes are surging on the back of rapid digital integration. The massive capital pooling in these Asian exchanges reflects a clear eastward shift in global resource allocation. When most people picture a stock exchange, they think of this: a dense, chaotic floor packed with traders shouting over each other and swapping paper slips. But that version of reality is gone. Look at this network model. Today, algorithms dominate trading. High-frequency systems execute millions of trades in fractions of a second. Because of this architecture, physical geography hardly matters. The distinct national exchanges have merged into one continuous digital machine. While this algorithmic framework creates unprecedented market liquidity and speed, it also introduces severe systemic vulnerabilities. Because the system is globally linked, a shock in one hemisphere, whether it is a sudden geopolitical conflict, a trade tariff, or a regulatory crackdown, now sends immediate ripples across indices worldwide. Beyond geopolitics, these digital networks face extreme volatility driven by automated speculation, and they are forced to constantly defend against sophisticated cybersecurity threats targeting their central infrastructure. To adapt, exchanges are deploying advanced artificial intelligence to monitor trading anomalies in real time, while enforcing new ESG compliance standards to track the environmental and social impacts of listed companies. But the biggest test lies just over the horizon: decentralized finance, or DeFi. Using blockchain technology, DeFi creates a system that can theoretically settle trades and move capital without the need for a traditional, centralized stock exchange at all. global stock exchanges have outgrown their origins as physical national marketplaces. They are highly automated digital networks, and whoever controls this infrastructure ultimately dictates the future of global innovation and wealth.